Hello and welcome to our hashtag We Connect webinar series. Thank you so much for joining us this evening. As a reminder, these sessions are recorded in live format as we always have new and exciting special guests. In the event you are unable to connect and/or get kicked off unexpectedly, please just sign on to the Zoom link that you were provided with. In an effort to create a connection between our strategic plan and our journey, we have created our hashtag We Connect series to ensure that we're streamlining communication and allowing our goals to get to the classroom level, as well as to communicate them directly with our parents and all stakeholders. Dan Lee, our tech director, is really driving our slideshow behind the scenes. And so I'd like to always say thank you to Dan Lee for participating and ensuring that everything works well. So as a reminder, the school district went through a very strategic and I would say helpful strategic plan process that we embarked on last spring. And the goal again is to put our strategic plan in action. Everything that we do in a district allows us to have a journey and a process, and we have 5 very specific goals in our strategic plan. As a reminder, they are tied to the culture of the school district, communication, curriculum and instruction, diversity, equity, and inclusion, and student support services. We've recently had a couple of different webinar series on curriculum and instruction, student support services, and you're of course seeing communication and action because that is super important to us that we can continue to provide relevant information to you as a community. Today we have a very special guest, and that special guest is Mr. Eric Grossi. And although his topic is not necessarily on our strategic plan, Mr. Grossi is our chief school business official. And he is our director of business who really drives everything that we do in our school district tied to our financial health and well-being. I am so honored to introduce Mr. Eric Grossi today as he is going to embark down our journey today to discuss Finance 101. So Mr. Eric Grossi, welcome to our hashtag We Connect series. I'm so happy to connect with you tonight.
Thank you, Dr. Woodland. For those of you that don't know me, I'm Eric Grossi. I am the Chief School Business Official here at Evergreen Park 124. This is my second year as a CSBO here. Before I was working at this district, I worked at Lamont High School District 210 and Crete-Monee School District 201U in the business office at both of those districts as well. I graduated my undergrad from Indiana University and received my master's in school business management from Northern Illinois University, and that's where I did my CSBO program. Fun fact about me, I am a very big fan of the Chicago White Sox and the Indiana Hoosiers. I like to go to as many Sox games as possible during the summertime. Another fun fact, in my immediate family, there are four chief school business officials. So you can imagine some of the conversations we have at the dinner table.
That is awesome. Yeah. Well, I really appreciate, Eric, some of those fun facts. And of course, I don't know if I've ever announced on our hashtag We Connect series that I am also a huge Chicago White Sox fan. So we definitely get along in that category.
Oh, yeah.
So you say this fancy term, CSBO, so that stands for Chief School Business Official. So that's a specific degree that you have to really manage our budget as a school district, correct?
Yeah, so each school district needs one chief school business official minimum in their district as part of the law.
Awesome. You want to know my fun fact?
What is it?
I also have my chief school business office degree, and it's something that I'm very proud of because my background was in teaching and learning, but I also knew I needed to know and understand a lot about school finance. And I just want to take this time, Eric, to explain to you that I've learned so much from you. And I'm really happy that we have this opportunity to share Finance 101 with our community.
Thank you. I appreciate that.
All right. So on to our first topic, Eric. So everyone knows what a budget is, right? As a person, you know what a budget is, correct?
Oh, yeah.
And I have a budget. My mom, I know every weekend she still sits down and she makes sure she's checking her statements, making sure they're accurate. So it's just common practice that everyone has a budget. And I really want to take some time today to kind of put that in school terms so we can kind of equate normal practice of what a budget looks like and sounds
Mhm.
like, and really help to understand why it's so important that a school district has a budget. So I'm going to transition that over to you. Within a school district budget, you're going to start to share with us the importance of our different funds.
Yes.
So, yeah.
So every school district in Illinois uses the same 9 funds. It's the education fund, which is Fund 10. This is the main fund in every school district. This fund is where majority of salaries and benefits get paid out of, and it is also the fund that we levy most of our tax revenue into. Outside of salaries and benefits, majority of professional development, supply purchasing, instructional and technology equipment purchasing, and tuition will go through this fund. The only other fund in our school district that salaries come out of is operations and maintenance fund. Some other districts will have salaries and benefits coming out of the transportation fund, but our school district, we do not have any employees in transportation, so we do not have salaries coming out of that. A fun fact about these funds, the only fund that we do not levy into is the capital projects fund. That's where our bond proceeds go. And if you guys remember from a board meeting last year, we had a bond come in, and the bond money that goes into the working cash fund. And essentially the working cash fund is a placeholder for revenue. We do not spend out of the working cash fund. Cash is in there to be transferred into other funds, and it could only be transferred into funds in which taxes are levied. And I previously mentioned that the capital projects fund is a fund that we do not levy into. So when we were going into construction this year, we actually had to transfer out of the working cash fund into the operations and maintenance fund. And then once the money was in there, we had to transfer out of the operations and maintenance fund and over into capital projects. So there's always a way to get it over there, but just, I thought that was a little bit interesting that we had to do it that way.
That is such great information. So everyone, you're gonna learn that Eric is really smart throughout the course of this presentation. So what I'm going to do in between is make sure that everyone understands kind of a couple of different things that Eric said. So most of our budget is really tied to our education fund, right? So
Yes.
that's fact number one. That was super important that you said. And it's because it's really important to us and to most school districts that we put high quality employees in front of kids. And so our education fund includes salaries and benefits and most of our professional development. Is that fair to say, Eric?
Yes. That would be
Great.
very accurate. Yeah.
So you said, I know we're going to get into this a little bit later, but you said this word levy.
Mm-hmm.
And I know this is hard to explain, but when we levy for money, we're essentially asking taxpayers to help support us in our budget. Is that fair to say?
Correct. Yes, that would be fair to say. Yeah.
Okay. And then what is the only line item again that we don't levy for?
It's the capital projects.
The capital projects. So it was so important when we received our bond money that we transferred that money into capital projects to ensure that we had the ability to do all of our lovely upgrades that we did at Southeast and Northeast this summer.
Yes. And that's the capital projects fund is where we would just pay for everything construction wise.
Perfect.
Yeah.
That was great information. Did you love doing those projects this summer? I feel like you really enjoyed that.
Yeah, that was something really cool. Being in the program and everything, I was always really excited to start getting into construction because just the look on the students' face when they see like their new building and how excited they are to go to school, that's what it's all about.
Awesome. Thank you so much.
Mm-hmm.
Okay, so transferring into just general principles behind school finance. So we always or consistently hear this term revenues and expenditures. So if you can spend a little bit of time just talking about what revenues and expenditures are, that would be great.
Yes, of course. So as Jenna said, the general principles behind school finance comes down to revenues and expenditures. If revenues meet or exceed expenditures regularly, your school district is financially solvent. If expenses start to exceed revenues, particularly over multiple years, the school district is probably heading toward financial difficulties. Now, as discussed earlier, everybody has a budget, and if you are spending over your budget, you need to cut costs. You have several realistic options to eliminate your personal deficit as an individual, not a school district. First, you could cut your expenses. This approach may mean that you cannot do some of the things to which you have been accustomed. You may have to go to dinner less often, postpone a vacation, keep your current car for a few more years. You could look for a position with a higher salary. You can consider adding a part-time job. Now, when a school district runs a deficit, it is exactly the same as an individual running a deficit. The only difference is that there are not as many options for a school district to fix a deficit. When school district revenues fail to keep up with expenditures, school administrators and school boards must increase revenues and/or cut expenditures. It's those two options. They will also need to use their cash reserves, just as an individual may tap into their savings account to cover immediate shortfall.
Wow, that was a really good analogy.
Thank
So
you.
again, it's always the school district's goal to run a balanced budget, which we're currently doing, which I'm super proud of. We're running a balanced budget, which means that we are spending on track. I think
Yes.
that's the best way to put it. We're spending on track, and that's super important to ensure that there's long-term financial stability for the district.
Yeah.
All right, great example.
Thank you.
Okay, so now we're going to go into a little bit further with local revenue sources. So I just have to tell everyone a fun fact about Eric too is he loves a good spreadsheet and he's very good at creating them. So he of course made beautiful pie charts to explain to everyone our local revenue sources. So if you want to proceed with just explaining our local, state, and federal revenues, that would be great.
Absolutely. So there's three sources of revenue when it comes to a school district annually, and those are the local revenues, the state revenues, and the federal revenues. And federal revenues are always have the smallest portion of your annual revenues. And it actually varies district to district between state and local, what is the main source of revenues. You will notice that District 124 in 21-22 had 78.2% of their total revenues coming from local revenues. This is compared to the state average of 64.5% for local revenues, which would mean that our district actually relies heavily on the local revenues in comparison. So property taxes and all that is that is as a result of us not receiving as much state revenue as these other districts are receiving.
Yes. And so we're going to go into a little bit further in the future, the difference between how we receive state funding and how there's no local control on that. That's directly tied to state funding formulas. And so the formulas in which we receive is the money in which we receive in return. So local revenues is really taxpayer dollars, and that's how we fund a majority of our day in and day out functionality of a school district. And that is essentially tied to Illinois and the way in which Illinois functions.
Yeah.
And that most of the revenue is tied to taxpayer money. Is that fair to say again, Eric?
I think that would be a fair statement again. Yeah.
Okay, great. Okay, so next, we're going to go into more specifics with local revenues, just to get an understanding of the different types of local revenues.
So there are four main forms of local revenues in Illinois. Those four forms are property taxes, corporate personal property taxes, earnings on investments, and fees from students. Property taxes are the largest single source of Illinois public education funding. Each district is required to submit a tax levy annually in December so that we can capture those property taxes. Failure to do so results in no property taxes to the district for the year. The tax levy is the number one most important part of a chief school business official's job.
Yes.
Yes.
Super important. And there cannot be any errors, right, Eric?
Correct. There is actually a story of, just errors going forward. Like I have, if I were to have levied $2 million, let's say in the operations and maintenance fund, and when typing it into the form online before submitting it, I accidentally forget a zero. So it says $200,000 instead of $2 million. Guess what? We're getting $200,000 in tax revenue for that fund, not 2 million. There's no exceptions. It's very, very strict. So it's very important that I double check my work and get everything over in a timely fashion.
Yes, of course. There's very specific timelines. It has to be board approved by December, which is really important. And so typically We have a board meeting in November to inform the board of our recommendation, and then a recommendation for approval in December. Super fun fact and really, really difficult job, Eric. So I appreciate your attention to detail.
Thank you. I appreciate it.
All right, these corporate personal property taxes, CPPT, right?
CPPRT, yes.
RT, all these acronyms in
I
education.
know. Yeah, so those are revenues received by the district to replace money that was lost by local government when their powers to impose personal property taxes on businesses were taken away. So if we're getting 80%, think of it in just like an easier term, like it's the other 20
Okay, perfect.
for businesses.
All right, and the other two categories would be earnings on investment and fees for students. Is there anything you'd like to add to either of those topics?
Those are a lot smaller portion. I would say property taxes are our main form of local, and then corporate, and then fees, and then earnings on investments, actually.
Awesome. All right. Well, thank you so much. We're now going to go into just another chart. This is our breakdown of local revenue.
Yeah, so when it comes to local revenues, we rely heavily on property taxes, as we previously stated. It actually makes up 92.4% of our local revenues in fiscal year 22, which is school year 2021, 2022. And local revenues make up roughly 78% of our budget. This number will go down slightly moving forward, though, and this is as a result of the property tax relief grant.
Ooh, one of my favorite topics and a huge celebration for the district as well as the local taxpayer. So if you want to briefly give us an overview of the impact of the property tax relief grant, that would be great.
Yes, of course. So the property tax relief grant created a way for districts to improve their state revenues as a result of those same districts abating taxes from our local revenues. So essentially, the state's saying, we will give you more state funding and in return abate taxes and make the tax dollars for your community go down, which is an awesome win-win for everybody. If we opted into abating our taxes, the state then agreed to bump it every year going forward. So now we're going to have a new state funding base of revenue, which is awesome going forward to spend on great things for our students. And I have a chart up here that shows you the exact numbers. So the first 2 years we took small hits of $300,000, but in 2025 we will start receiving an additional 1.3 million annually. So we're already making up that deficit right away. And then going forward, it's just going to be more and more.
Awesome. So what you're saying is that this provided the local taxpayer a break in their taxes.
Yes.
And it increased our revenue from year of 2025, approximately $1.3 million.
Correct. We actually are seeing that money right now, but with us also abating our taxes, we're seeing a little bit less revenue overall, but our state funding has bumped up officially.
Awesome. Awesome. That is absolutely a win-win situation. So we were able to apply for this grant. We received this grant, and I'm super happy that it's something that can provide again for our students. All right. Moving on to state revenues. This one, I have to tell you, was super tricky for both Eric and I to really think about the best way to explain it. So again, state revenues is tied to evidence-based funding. EBF funding is what we say in school business world. And it's a state funding formula. So I'm going to let Eric explain the 4 different tiers as well as where we at Evergreen Park lie.
Yes, so the Evidence-Based Funding for Student Success Act was passed in August 2017. And before this, schools used to receive their state funding through general state aid. Evidence-based funding was created in an attempt to narrow the gap between school district wealth in Illinois. So evidence-based funding is by far our largest source of state revenue. There are 4 tiers to evidence-based funding. Evergreen Park 124 falls into tier 2 as a tier 2 school district. Think of each of these tiers as a bucket. The tier 1 bucket receives the most revenue from the state of Illinois for every dollar. Tier 2's bucket receives a little bit less, and so on and so forth. You'll notice on the chart on the bottom right of the slide, every year when the governor submits a state budget, he will put into that budget how much new revenue will be going into evidence-based funding. For every dollar dedicated with this new revenue, 50 cents goes into tier one, 49 cents goes into tier two, which it's a little confusing because tier one could get a little bit of that as well.
Mhm.
0.9 of so 90% of a penny goes into tier three, and actually 10% of a penny will go into tier four. I know it
Oh my
sounds small,
gosh.
but the increases are rather large. So
Yeah. Yeah. So we have some facts here. So tier one received the most revenue from the state of Illinois. Is that fair to say?
oh yeah, very fair.
And then can you talk about the different pros and cons of being in tier two versus tier three or four?
Yeah, if we're in tier two, a pro is that we're receiving additional state funding when compared to tier three and four. And it also means that in the eyes of the state that we're in a healthier spot than tier one, which
Yes.
is, I guess, a pro as well. A con of being in tier three, a con of being in tier two is we receive less state funding than tier one.
Right, exactly, exactly. So that's a great point. And you did an excellent job explaining that very, very difficult funding formula. So I appreciate that.
Thank you.
All right, so state revenue, we have another fancy graph. I would expect nothing but the best from Eric in terms of his visual displays. So go ahead and explain this chart to us, D124 versus the state average.
Yeah, I previously mentioned a couple slides ago about how we receive a little less state funding than the average school district. And the graph shows what percent of our total revenue is made up by evidence-based funding. And then on the right side, it shows what's the state average as a percent of those school districts' total revenue. So you'll notice that our average is roughly 7% less than the state average as it comes to evidence-based funding as a percentage of their whole revenue. And this is
Right.
why local revenues makes up roughly 14% more of our revenues than the average district in the state.
Okay, that makes sense. And it's mainly because there are other districts that would be considered tier one,
Mhm.
or considered tier two. So tier one districts receive additional state funding than we do.
Correct. And just because, if there's another school district in tier two and we're in tier two, that does not mean we're receiving the same dollar amount. It means that we're in the same bucket in which there is a dollar amount. There's a very long, difficult formula that the state uses to figure out how much specifically each school receives as a result.
Okay, perfect. And I'm sure you've studied that formula in depth.
Yes, yeah, it's very, very long.
All right, well, thank you for the great chart.
Of course.
Okay, so moving on a little bit further into state revenues. So do you want to go ahead and explain the other different sources of state revenue?
Yeah, of course. The other forms of state revenues are categorical reimbursements and grants. Categorical reimbursements would be your special education reimbursements minus Medicaid. It would be your annual transportation claim, and then it would also be the early childhood block grant and the bilingual education grant. Pretty straightforward, nothing crazy in relation to evidence-based funding. Evidence-based funding makes up a very large portion of our state revenue.
Okay, great. All right, next we move on to our last bucket of funding. So we did local, we did state, and last is federal. So if you want to explain federal revenues, that would be awesome.
Of course. So if someone doesn't really necessarily know school finance too much, you may think, oh, they probably receive majority of their revenue from federal government. It's actually false. School districts receive a smaller portion of federal funding in relation to state and local. That is because of the 10th Amendment. The 10th Amendment states that the powers not delegated to the United States by the Constitution, nor prohibited by it to the states, are reserved to the states or to the people. And as a result of that amendment, the states have created their own unique public education system. Since the federal government has no direct authority for public education, its primary involvement is to pass legislation, often linked directly to federal funding, so like federal grants.
I mean, I just love that fact, Eric. I think it's so important to recognize that the state is the local. Again, yes, we have local control, but the state is really governing how we use that funding. And then the federal government is directly tied to a couple of different grants that we do receive.
Mhm.
So let's go ahead and talk about our federal revenues.
Of course. The main sources of federal revenues are free and reduced lunch and breakfast, Medicaid, which is the only special ed really outside of the claims outside of what was talked about for the state revenues, title grants, IDEA, which is the Individuals with Disabilities Education Act, and there's the IDEA flow through grant and the IDEA preschool grant, and then any other federal grants, and those vary over time. For example, one grant that school districts received during the COVID pandemic is the ESSER grants, and we received 3 of those, and those were all from the federal level.
All from the federal level. So title grants are specifically tied to low income. Is that accurate?
Yes.
And then Medicaid, what is Medicaid reimbursement again? Can you clarify? I know this is one of your favorite topics.
Yes, of course. So Medicaid reimbursement is reimbursement for the state. I mean, the federal government works along with us as a form of trying to reimburse us for more expensive purchases as it comes to the needs of an individual with an IEP that also has Medicaid. So
awesome. Great explanation.
thanks.
So those are all the grants that are tied to federal revenues. And I'm assuming that there is obligations as a school district, just to clarify that we're responsible to provide grant explanations tied to these federal revenues and also how we spend those federal revenues. Is that accurate?
Yes, every quarter, and some grants are going to twice a year instead of every quarter, we have to submit an expenditure report. And then when we submit that, it goes to the state or the federal government and they review it. And once it's approved, that's kind of the green light for the state or the federal government to send the money to us for what we spent during that time. It's not like we receive the money right away and whatever we don't spend, we have to send back. It's more so once they can confirm that we spent it, then we receive the money as a form of a reimbursement.
Yeah, it's like a check and balance. They want to make sure that we're spending the money appropriately allocated to the funding that they said at the federal level is appropriate for us to spend that money on. So there's definitely checks and balances in place.
Right, which is good. It makes sense.
Yeah, absolutely. All right, next we're going to talk a little bit more about our school district expenditures. And Eric lives in the world of object codes. So he, of course, put all of the object codes on his slideshow, which is fabulous. Yeah. So talk to us a little bit about our district expenditures.
School district expenditures are sorted by object code. The Illinois Program Accounting Manual has the coding as follows. The salaries are object 100, benefits are object 200. Professional services such as school district audits would fall under object 300. Now, the object codes are a little bit more straightforward than the funds. Let me say real quick. And then if you go to the next slide, please. The supplies are 400. Capital outlay, which is purchase of land, buildings, site improvements, and capital equipment, is object 500. Other purchases that don't fall under any of these categories will be object 600. Non-capitalized, which is anything that we purchase where it's an individual item that's over $500 but under $5,000 will qualify as an object 700 purchase. And then termination benefits, which is unused sick and vacation days, would go into object 800.
Fabulous. I vividly remember this is tied to our federal grants. If you don't do the object codes correctly, they send them back to you and they say, please redo them. So it's really important that they are outlined appropriately tied to what we're spending the funding for. You have to memorize them, right, Eric?
Yeah. Sometimes I think, why do I know so many codes? Just in my head, they just always are running.
Yeah, for sure. All right, and the next slide is another great visual that just breaks down our expenditure by object.
I just thought this would be a nice graph to show. These are the things that, as a CSBO, it's important for us to look at and identify that we're spending properly. So it's important to see that we're, making sure we're spending a quality amount for each of the different object codes because, there's a reason that they're out there as object codes. They're important for the district. So I just use this as a reference and thought it would be a good thing to share.
Great. Thank you so much.
Yeah, of course.
All right. So Dan, I just want to double check that we don't have any other questions. If not, I'm going to ask Eric a couple of questions and put him on the spot.
No additional questions.
No additional questions. Okay, great. All right, Eric, now for the fun stuff.
Cool.
So I always like to ask everyone who joins us on our hashtag We Connect series, where do you wish to see the district in 3 years from a financial standpoint?
Great question. So in 3 years, I would like the district to be in a healthy financial standpoint. And what I mean by healthy is that I would like to have created enough of a fund balance where we could purchase nice things for our students and pay our staff properly, while at the same time have reserves in case of an emergency. One example of a recent emergency that a lot of school districts had to deal with is there was a delay in tax payments this school year for the first half of the school year. And when districts were given a heads up about this, actually, a lot of districts had to go borrow money to cover payroll during this period.
Yeah, that's so scary.
Yeah, and that's due to those districts not having enough money in their reserves. So I think it's very important to have money in reserves because you never know what's going to happen. And it's always nice to have something just in case of an emergency.
In case of an emergency. We also have a board policy, right, Eric, in which it
Yes.
states that we are to have 6 months in
6
fund
months
balance
fund
reserves. And we're still working towards that to ensure that we have enough money in our reserves in the event of a rainy day. I think we all know that things happen. I mean, we just experienced a worldwide pandemic and people needed additional funding on hand to ensure that we had access and accessibility to all of our students in the event that we do see and or venture down a road of unexpected terms if things occur.
Yeah.
So that's definitely a great goal. I just want to emphasize, I do believe, in terms of recruitment and retention, it's so important, like you said, that, we continue to pay our teachers appropriately and that they feel treated and valued in terms of, their financial package and well-being. And I do think we have so much to offer here in Evergreen Park, and it's just a great place to be. And it's just continuing to keep up with the trends of keeping and retaining teachers.
Agreed.
Thank you for that.
Yeah, of course.
And our next question, I always hear this levy term that we talked about. So why is, again, the levy so important to the school district?
Yeah, I mean, a little bit earlier, I gave that example of, if I forgot to enter in a zero. I mean, that piece of paper is so important. I mean, when I go to the Cook County office in Chicago, I'm a little annoying with it, but I ask questions, confirmation, can I please have another copy? So I'm good. There's nothing else I need to do. It's that important. If we forget to submit the levy in time, we're receiving $0 in property taxes for that school year.
Yeah, super important.
Very important.
Yes, for sure. All right. And our last question, this is a fun one, and it's going to be hard for me to not comment on this, so I will let you go first. But if you could change anything within the Illinois funding format, what would you change?
Right. I would love to make it so districts didn't have to rely as heavily on local revenue, and more so every district received majority of state revenue. I think that this would create a lot of consistency across the board and would be a lot more equitable across the state for each school.
This is why I hired you, Eric, because I would have said the exact same thing. I think ultimately, long term, we want to just continue to advocate for the needs of teachers and kids. And, when you look at your pie charts, Eric, I mean, it's hard for me to not notice that a lot of this relies on a local taxpayer, which is out of our control, but we're so fortunate we live in such a great community who's willing to work with us and understands the importance of contributing that to a school district. And that is not special or unique to Evergreen Park. That's just where we are as a state. And I'm very hopeful for the future and long-term plans of what that could really provide for our kids. And hopefully we do see a small shift in that long term.
Yeah, I'm very excited to see what the future holds.
Great. Is there anything else for the good of the order that you would like to share about school finance, you being our director of finance? What's your favorite part of your job besides making spreadsheets, Eric?
I mean, to be honest, like my favorite thing is knowing that if I'm doing my job well, that means that we're receiving more revenue and we have a healthier school district. And as a result, we could provide better resources to our students. I mean, that's what it's all about. And that's so important to me. It really is.
That's awesome. Great answer. All right. Well, on that note, I would like to thank everyone for joining us tonight. As a reminder, you have access to all of our information tied to our strategic plan on our website. In the event you missed tonight's live feature, it will be shared with everyone digitally and located on our YouTube page for your future reference. This was our Finance 101 session, but I'm sure Eric will be back to make sure we continue to take a deeper dive into school finance, as there's a lot of different layers that are tied to making sure that a school district is on a healthy financial track, which we absolutely are. So thank you
Looking
so
forward to
much,
it.
Eric. Yes, I appreciate you connecting with us tonight, and you have a good night.
Thanks, you too.
Thanks.
Bye, guys.
Bye.